FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and, well, commodities, gold, silver, are they perfectly poised for the ultimate takeoff, or is there more bloodletting to be done? Well, we don't know the answer to that, but Ned Schmidt is with us again. You know him well, been on the show many a time. His 2 publications, agrifoodvalueview.com, the valueviewgoldreport.com. He's been making his case for quite some time now. Ned, welcome back.
Oh, it's good to be here. How are you today?
All right. So gold and silver first. They knock it down below 1,200. And then it comes rebounding back like nobody's business. I think that's telling us something, isn't it?
Oh, most definitely it is. You know, I went out of 2014 kind of depressed, and in the last couple months, my enthusiasm just keeps building. I'm happier right now than a pig in mud. I mean, the gold and silver markets are set up like they were in 2007. To 2009. You got to go back before those years to see gold and silver where they're at today. And investors had better start paying attention to it. If you look at gold, where I started on gold originally was a simple place. It was the ratio of gold to the S&P 500. And that tells you something about the price of gold relative to financial assets. And that ratio right now is about 0.57. Now, in and of itself, the ratio doesn't mean much. But the last time we saw that ratio was at the end of 2007, when gold was $833 an ounce. And so relative to the financial markets, gold was where it was at $833. Now, for those of you that don't remember, it went from $1,833 to $1,900. Now, what that ratio really tells us is when we say, what does it imply? If we take the ratio for the last 70 years, the average ratio, and say, if the S&P 500 is correctly priced at about 1,200, what should the price of gold be on average? It's over $2,200. Over $2,400. So it implies that the S&P 500 is correctly priced, gold should double. Well, let's say, another way of looking at it is, let's say gold is correctly priced at $1,200. What does that say about the S&P 500? Well, it says it should fall by 50%. So what we've got here is, in relative terms, that gold, if the S&P 500 is going to stay at 1,200, gold's on its way to double. Now, reality is going to be somewhere in between there. But it says this has been the best, now is the best time to buy gold since 2007. I mean, that's got to make you happy, because we all know what happened after that.
Oh, yes.
And so, yeah, and the complacency in financial markets prior to the economy crashing in 2008, it's just like it is now. I don't know if the economy is going to crash, but the equity market is saying it'll never crash. Gold's saying, buy me, buy me, buy me, buy me. And so I'm sorry about that. I'm kind of in a euphoric atmosphere waking up like this. And then you got silver. It doesn't take any analysis anymore. At under $16, you don't do any analysis. You don't go look at a chart. You don't go do anything else. It's below the cost of production. And so it's a buy at $16. But let's go another step. Let's look at the price of silver relative to the price of gold. And I've been writing about gold for decades. And this year is the first time I have ever published a graph of the silver to gold ratio. It's because it has been used really only 3 times in history. Prior to 2009, when silver was over $40, and now that ratio of silver to gold is so low, you got to go back to 2000 before 2009 to find a similar level. What does that mean? Silver is the barometer of investor emotions in the metals market. When silver is down relative to gold like it is now, it means attitudes are bad. People are spitting on the silver charts when it comes up on a computer.
That's for sure.
And when it's high relative to gold, they're euphoric. So you've got a valuation situation you haven't seen since 2007. You've got a measure of the emotions that are so hateful toward the metals. You haven't seen that since before 2009. So this gold and silver market is just a setup right now. It's a gimme. And what I can't tell you, Kerry, is the day it's going to start this move upwards. Because the catalyst, we don't know what the catalyst is going to be. It could be the dollar. I mean, the dollar topped out 3 months ago. And this belief that the dollar is some super currency, nobody's looked at the balance sheet of the United States government lately. So, and if you look around the world, I mean, Putin just went into hibernation for the winter. He's not done. And I think anybody, Kerry, that's looked at the Middle East, I mean, the Middle East hasn't been this screwed up in decades. I mean,
oh my God! In our lifetimes, yeah. Anything could happen there. It's a powder keg. It could blow any second. Look what's happening with Saudi Arabia in Yemen. We've got a nuclear aircraft carrier off the coast of Yemen in the Gulf of Aden. Iran is involved in this game, and what the heck is going to happen now? Good question. I don't know. It's just amazing.
The best analysis I've read, Kerry, I recently read Henry Kissinger's last book, World Order, and he doesn't give any answers. 400 pages, and he never gives you an answer. But he goes through an analysis of the Middle East. And if you weren't scared of the Middle East situation before then, you are after you read his analysis, because there's no way that Iran is going to accept peace with the West. It's not part of their theology.
Exactly.
Everybody outside the Muslim world is an infidel.
Yeah, we're Satan. We're Satan.
And you just cannot separate their theology from their foreign policy. And so it's a matter of if, not when. I mean, when, not if.
Yeah.
Oh, it all comes down. You got to own gold and silver. I mean, the world is not going to buy Apple stock when something blows up in the Middle East.
Yeah, well, your iPhone ain't going to do you much good when it all hits the fan. That's for sure. Except you might be able to calculate the price of stuff using the calculator that's built into it. But aside from that, not much good. No.
And I mean, most of our listeners probably already own the gold and silver, and they're probably in a bad mood on a regular day when the funds are selling it. But happier days are coming.
Oh yeah,
there's just no other investment right now.
Agreed. It's just it's not worth really worrying about. I stopped worrying about it a long time ago. So hey, what about on the agricultural front? What's happening there?
Ag is, I hate to be going back to 2007 to 9, but 2007 to 9 is where agricultural commodities are again now. And there's apparently been not a change in policy in China, but an acceptance of reality. That China is now accepting more the reality that they cannot feed their people domestically. There's always been in China this attitude that we will strive for self-sufficiency. We know that's not going to happen. So we'll redefine self-sufficiency as 90% of our food needs. And in the last year or two, they've seemed to have abandoned that and said, this land that we're trying to grow crops on, can't grow crops on. I mean, their price of corn is $10 a bushel. Ours is under $4 a bushel. Now, why is it at that 10? Because that's what it costs to get a farmer to raise it. And they're finally saying, this is not going to work. You take rice. Rice is not just a food to Asians, it's part of life. And in the last 3 years, China's rice imports have exploded. They appear to be giving up on growing rice, increasing their rice production. The other problem they got is contaminated land. In the last couple of years, there's been numerous scandals on vast areas of rice land that cannot be used to grow rice anymore because they now know it has heavy metals in it. How would you like a little cadmium with your rice today? I mean, that's a serious problem. And the reality that they can't meet the demands for pork and chicken and beef in China, Korea, Japan, or anywhere else in Asia means that they only have one choice, and that works. If they could import grains to feed the cattle, but they don't have the water. I mean, I'm sorry, folks. You got to give a cow a drink of water every day. So the real choice is: do we import grains and water, or do we import a cow and a pig? So like the answer is, it's easier to import slaughtered beef and slaughtered pork than it is the grains and water. So this big demand is still there, and it's getting bigger and uglier. Now, let's beam us to the United States, where we had 2 great crop years. Okay, you have bet on number 12 twice at the roulette table, and it's come up twice in a row. It ain't going to come up the third time.
It's virtually impossible.
And that's where we are today, that farmers are cutting back acreage. They're planting less seed. They're buying less fertilizer. They're buying less pesticides. And the production is going to start weakening again.
Going to hit the skids.
And then let's go back to the emotional side. The last reporting week from the CFTC on the traders' positions was a week ago Tuesday. Their net short position by managed funds has never been this high. In fact, it went up 40% in the last reporting week. Managed funds have never been this bearish on grains in all of history.
Really?
And it's unbelievable.
That's amazing.
And
do they know what they're doing?
Of course they don't know what they're doing. They use a computer program. I mean, if they got this little software with moving averages and MACDs. I mean, if one way to ruin your career is with a MACD. And they think they're smarter, but they really don't understand the fundamentals. I mean, they don't pay any attention to the fundamentals. And so we've got
It's strictly technical traders, in other words, right?
Yeah.
Okay.
And a massive short position. And
so they're going to get
some
caught
point,
with their shorts in the bind, as they say, right?
That's right. That's right. And so it's as good as it gets, you know?
Yeah.
And then we get reminded, I don't care how many iWatches Apple sells. Bird flu is a reality.
Yeah.
And we're in the process of destroying 8 million chickens. I don't care how many iWatches you get.
Is that true?
Yeah.
8 million of the damn things? Really?
Yeah, there's a massive outbreak of bird flu in the United States.
Really?
And it's a particularly strong one, and they are clueless as to how it's being spread. This is the first time that they think it's being spread by the winds.
Oh, my goodness. Really?
And the latest count, and rising, is 8 million birds are going to be destroyed.
So I better go stock up on chicken now, is what you're telling me? Go over to Whole Foods and load up my freezer?
And eat an egg while you can afford one.
Oh, man. Eggs, too. Yeah, well, I guess eggs come from chickens, now that I think about it.
Yes,
Isn't
Kerry,
that what happens? I thought they came from the supermarket.
From the grocery store.
Wait, is that true? Is that true?
They come from chickens.
Are you sure? That's not what my mother told me. They're right on the shelves there. Come from chickens, huh? So, but wait, like you go to Pennsylvania and they've got these like metal buildings filled with chickens, and the chickens can still get bird flu being in those coops?
Yes. Well, and the thing is, if one bird in the flock gets it,
then they're all dead.
The whole flock's going to get it. I mean, this thing spreads rapidly.
Oh, no.
And it's in the upper Midwest. Iowa is the big chicken state, and Iowa over to Minnesota, Wisconsin, that area, and it's spreading west. And so, and where it's hitting is in laying hens. These are hens that are kept just to produce eggs.
Uh-huh.
They're never going to go to your kitchen table, and so and they produce both table eggs and unfertile eggs.
Right.
And the fertile eggs that produce chicks. Yes, folks, chickens come from eggs.
Can't they give them a shot of something, a flu shot? Like you go for your flu shot? Can't the chickens go for a flu shot?
Well, how long do you think it would take to inoculate 8 million birds?
I guess that would be a while, huh?
Yeah, it's not practical. And what you have to do is you have to destroy the birds, and then you have to clean the facility. And the facility has to be, the bug has to be eliminated in the facility.
Major losses for the producers too, huh?
Oh, yeah. And we already know there's going to be shark turkeys this fall out of it. So, but the real thing to remember is that we don't control Mother Nature. I mean,
it's true.
This avian, they call it avian influenza, because you don't want to call it bird flu because people stop eating chickens. But there's no risk to humans. And it's beyond our capability. No matter how much technology people think we have, this microscopic organism is stronger.
Sure.
So where do you go? What I'm trying to get to is that we've still got the same old supply and demand situation. It just was short-term good in the United States, and it's not going to stay that way again. So this is still a sector that investors need to be aware of. Now, something changed on December 31st. I don't know what it was. I can't give you the answer. But the ag stocks, since the beginning of the year, have been outperforming. 60% of them are doing better than the market. And I think there's a couple reasons. One, last year nobody owned them. I mean, everybody's up to their neck eyeballs in technology and biotech. These companies didn't go out of business. They're not like a gold miner or a copper miner.
Mm-hmm.
They're not dependent on a single commodity. They are globally diversified in terms of grains and customers. And so it makes them distinctly different from other commodity companies. And so there are still some places investors can look. Like one I've been talking about for some time, JBS.
Oh, yeah.
And JBS is the big meat company. It is the world's largest animal protein company. And there is no number 2 and there is no number 3. Okay? This is it.
That's it.
It's based in Brazil, but 80% of their revenues last year came from the United States. And so the stock trades in the United States is JBSAY. It trades thin, it's volatile. If it's run up recently, if you missed it, wait a week and you can buy it again. JBS is one you need to own. Syngenta is the cheap alternative to Monsanto. And the reason it's cheap is because they had a genetically modified corn that U.S. corn farmers had to plant because of some rootworms problems. It was not approved to import into China. Since China has now changed their mind, and you can import Syngenta corn into China. And it sells on a relative value basis about half of what Monsanto sells. AGCO is a tractor company. 75% of its sales are outside the United States. You buy capital goods stocks when things are not good. You don't buy them when their sales are screaming upward. And so now is the time to be looking at an AGCO. It's cheaper than deer. You don't own deer, you should own some deer.
Right.
BG is an international grain trading company.
Mm-hmm.
We have 4 big ones. Archer Daniels and BG are the only 2 that trade publicly. And so if the world needs grain anywhere in the world, BG is one of those companies that moves it. And so it is the hardware for the international food system. And so those are the ones that are cheapest right now, Kerry.
Makes a lot of sense, Ned. Anyway, we have to get moving. So just tell us again where we find you.
You can find my gold work at valueviewgoldreport.com, and my ag work is at agrifoodvalueview.com.
Excellent.
And it's been fun, Kerry.
As always, and you'll find the links in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for the newsletter, and always a pleasure, Ned. We'll talk with you again real soon.
All right, have a good week.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.